Bagga, let me come to you and ask you maybe a tougher question than what I asked actually Aditya, because what is spooking the markets? Do you think it is just the Trump tariff threat that's actually making the markets react the way they are? Because today you saw, or rather on Friday, you saw a very sharp cut coming in for the benchmark indices, which were actually trying to hold on through the course of the week.
Yeah, if you see how we have fallen from the all-time highs of last week of September, it started with about $50 billion globally going into Chinese stocks on the basis of stimulus talk. Then we had the Trump election on 5th November, when we saw US exceptionalism peaking both in stock markets and economic growth terms, as well as positive sentiments towards the US. We saw a lot of money going into the US stock markets. In fact, in January of this year, US stock market saw record breaking inflows on peak sentiment towards Trump. Now there is a sobering of that sentiment that's happening, but the damage was done to emerging markets first by optimism on a Chinese turnaround, second on the Trump trade, which were both negative for emerging market flows, positive for the dollar strength. Now what is happening is the markets are factoring in a higher persistent inflation in the US, a chance of a recession engineered by Trump tariffs. So, those 25% tariffs are going to hurt global trade quite hugely. And it is right now a weaponized tariff that he's holding. And that is leading to a lot of risk sentiment going off. There is no business for Bitcoin, for example, which was a classic Trump trade, to have fallen 25%, or gold to come down from 2960 to sub 2,900 levels. This is basically what it's showing you, is that money is being taken off the table and the sentiment has got spoiled. And I would say that now that we have got the headlines on all the pink papers, tomorrow morning you will see already the digital pink papers are carrying bloodbath on D Street. I think now we are nearing the bottom. I feel very confident when all the wirehouses start talking about mayhem and the end of the world. It's coming nearer to the end, and we have seen that we are down 20% plus on small and mid caps, 16%, 17% down on the leading indices. Another 2 weeks at this rate, we will cross that 20% barrier and be in a bear market. I think that is now holding up hope. So I'm not saying go all in. That level is still not there. And again, March 4th and April 2nd are very important dates for the Trump tariffs. Let's see what happens on 4th March, whether 25% each on Canada, Mexico come through and 10% more on China come through. Market has already reacted. You might see some buying coming in. And then on India and Europe, April 2nd becomes a very important trade. So I don't expect much of a recovery before those two dates are gone through and we get some clarity on what the impact will be. It is going to be quite a significant impact on the global economy. But right now, the good news is a faster market fall is always welcome. If you have 1,000 cuts market fall, that's very painful to go through. And that's much more difficult to regain from, to recover from. So the way this market has fallen, 5% plus in February itself, 5th month in a row, I think it's breaking records on the downward side. And now the sentiment is equivalent to a COVID time or a 2008 time in terms of sentiments and the bearish positions, which is very good for the market. So I think we are nearer to the bottom. Might take 3 months, 6 months, that no one can say.
Absolutely.
If you like this video, then like, share and subscribe to ET Now.